So let's now talk about the vegetation cycle, how to draw the stages in the right direction. How to draw the stages in the right direction. So we have some principle. The most important part is the correction. The most important part on the vegetation cycle is the correction. Let's talk about the correction now. Let's talk about the correction now. Let us talk about the correction. So let me first of all tell you the principle that counter with the vegetation cycle. Um, you know that when the market moves to the upside like this, it creates the letter M, right? This is what I call, my price action is called M, the M letter. It creates the letter M like this for the buy. So what we realize is that when the market moves to the upside this way and creating the letter M like this, you will realize that you will realize that the last leg is long like this with a lot of green candle. But this correction, this pullback have red candles, right? That is for the bullish movement, a rising movement, a buy movement. So, but the last leg has a long leg like this. This long leg, this long leg is what I call the Luffy leg. The Luffy leg. You know that the manga, this manga, this anime, uh, this hero has long leg. It's called Luffy. Luffy leg mode. You see, for those who saw the anime, he has a long leg like this. So the idea is that the principle behind it is that when you have a long leg like this, and the market has to come back and make a pullback. When does this pullback, if the red candle start to appear again, when does this pullback will stop? Will it stop at this level? Will it stop at this level, or will it come back till the bottom? So to know it, you need to look at in the middle of the long leg. Do you have a red candle like this? Because this one was a bullish movement, a rising movement, a buy movement. So if you have a, a red candle, the first stage where the candles, the pullback will stop will be at the body of this candle. That will be the first stop of the pullback. Now, the candle can keep going down, but where will be the next stop? The next stop will be at the second red candle that will be on this leg, on this last leg. So at the body, the candle will stop at its body at this level, like this. So you have two places when to anticipate, to predict where the correction will stop. So, and that will be the correction of the market. You will place something like this in 4 hours, and you will call it correction. But you will know in advance by just looking at the Luffy leg, because this is the Luffy leg, by just looking at the Luffy leg, where the market will stop itself. So there's another scenario when the market moves like this to the upside, right? And then you have red candles at this level. You have red candle for you have naturally a red candle for the pullback here. So when the market is above here and there is no red, now let us suppose that on this Luffy leg, right? On this Luffy leg, there is absolutely no red candles. Where does the market comes and stop itself? It will come and stop itself. You will just look at Luffy leg, on the left side of the Luffy leg, you look left on the left side of the Luffy leg, you look at the highest resistance, VRS, highest VRS, which is this one. And the candle, when the candle will fall down to the bottom, they will come and stop at this at this highest resistance, at the weak at the weak of it. So you can actually now, if you don't yet have this leg, you can actually now draw a circle like this and put a correction and say that this will be the correction and call it a correction. Even if you don't yet have, like, the market were moving to the upside, you don't yet have the leg like this. You just look at this point. There is no red candle in the middle here, on the leg here. You just place a line like this, and then you place your circle to say this is the correction. That's how you know how to draw the. That's how you know how to draw the the cycle, the stage of the cycle. Okay. So now there is another element. There's another element. There's another principle. Let us say that the market is moving to the upside like this, right? And showing you a Luffy leg. So now you can have one red candle here, another red candle here, and then you have the bottom of the Luffy leg at this level. The market will stop, first of all, a little bit at the number one, at the first candle, red candle, then the second candle. Then if the market goes down, it stops here first, right? For the correction. And then goes at a deeper correction on the second red candle. And then if the market comes and break the bottom of the Luffy leg, what does that mean? That means that we have a very deep correction that end up at SSB, at H4 SSB, a deep correction that end up at H4 SSB. You will see H4 SSB here, somewhere here like this. That would be a very deep correction. That's how you know that you have a very deep correction, right? Or the second case is that, the next case is that you have the same movement, right? You have the same movement like this of the Luffy leg. And then you have one red candle just right here, and then you have the bottom, you have another red candle here. So you have two steps where the market can stop, and the third one. If the market comes, stop a little bit here, but continue go down, and then break the bottom as the same way it broke the bottom of this one, right? Of the deep correction. It breaks this one. This one can be a complete reversal. That's when you know that it is a complete reversal. Breaking the bottom of the Luffy leg can be just a deep SSB correction, or a complete reversal of the market to the downside. So you need to be aware of it. You need to know this. So now, I hope you understand, but I know that you don't understand yet. So let us go on the chat and do some live examples. So let's look at this one. You see that we are on the 4 hour, and this analysis is only done on one time frame. You don't do time frame skipping analysis, linear analysis, only one time frame. This everything that I'm telling you now, do it only on one time frame. So look at how the candles were going up, down, and then it created this last leg. This last leg, I mean, what the fuck is and he created this last leg, right? When he create, what the, what the fuck just happened? Okay, he created this last leg. So when he create, when he has created this last leg is called the Luffy leg, right? Look, look at this. From the bottom here to all of this is is the Luffy leg. Let me draw it well. Let me remove Ishimoku and draw it. This whole leg, this whole leg only have green candle. So the question is that where does the market will stop itself? In this case, when you look at this Luffy leg, it has no green candle, red candle in the middle for it to stop itself. So you look left at the left of the Luffy leg, and then you find this VRS resistance. This is where the market will first of all stop itself. As you see here, it made an upward movement, right? That is the first stop of the market. And then the next stop will be at the bottom of the leg of Luffy at this level. At the bottom of the leg of Luffy at this level. But for the moment, we did not touch it yet. If we touch it yet, if we touch it, we know that the market is will be doing the reversal. So that is how you know. So when you put Ishimoku, when you put back Ishimoku, if you didn't have the, if you didn't have these falling down candles, right? And then you wanted to know if till when the till where the the reversal will fall down, you will have done this. You will have done this something simple like this. You will have just come, identify the Luffy leg by doing by just looking at the last impulsion that is showing on your screen, who has a long series of candles, which is long, like during the price action MW price action like this. And then you look at it, you identify if there is a red candle in the middle. There's no red candle, so the only thing that you have is at the left of looking at the left of the leg. So this will be your first stop of the candle. So you can actually predict that the market will fall by this number of pips on the right side. So you can actually place a correction like this, aiming the top of this one like this, right? So I know that I told you that when you want to do when you want to draw a correction, you can actually, rather than looking at the price, you can actually look directly at at Kijun. But the problem is that, right? The problem is that, right? When you are at this level, when you are at this, when the candle, when the candle is at this green candle, how do you know if you aim this Kijun? The Kijun in the future is not yet loaded. How will you know approximately or a little bit where the price can stop itself? Because Kijun is still on the left here. Kijun is not yet on the right. We are still at this vertical place at this time at 7 p.m. It's only when we reach the next is it the next day? It's only 2 days later at 7 a.m. that we have Kijun, that we touch Kijun. But if you don't yet know the future like this, you can actually anticipate a little bit where the price will come and stop itself, even if Kijun is not yet plotted here. at this level, right? So you can anticipate this movement. And we knew that, and we know that this was the reversal. We know that at this candle it was the reversal. Everybody knows that at this candle, at this green candle, it is the reversal. It's already known. Why? Because even on H4, when you look at Tenkan H4, first of all, the candle is in the empty space. So this is a reversal setup in the empty space. Secondly, we have a Tenkan hitting the VRS. So this Tenkan just passed the VRS, and since the Tenkan passed the VRS, the candle has not yet made themselves, has not yet didn't yet reverse themselves. So it should reverse. The candle will reverse himself very soon. That's the first thing that you have in mind. The Tenkan VRS always play out. Secondly, when you go on daily, what do you have on daily? What you have on daily is that the candle are inside the empty space. So it's a reversal. It's an obvious reversal. And even on weekly now, on weekly, what you see is that when we were at this level, right, the Tenkan weekly were hitting the VRS resistance of this red candle at this level. So this candle of weekly should be creating a reversal. So what I call Tenkan tapping or hitting, Tenkan hit the VRS. It is this, right? That's what I'm talking about. Tenkan hitting the VRS. So that's how we know that it's the reversal. It's not as if we are doubting, we are speculating. It's not about speculation. We know Tenkan VRS a is a reversal, that is an elite reversal for the vegetation cycle. Let me call it that way. Let me place it like that. We know that it is the reversal here. But now on 4 hour, how do you know that? How do you know till when the price will go and fall? It will reverse till when? Till which place? You just look at the left of the Luffy leg. So that was one example. Let us look at another example. Let us look at this example, for example. When you look at this example, you see that the price were moving to the upside, creating M figure, M letters, and this long Luffy leg at the end, right? You see this long Luffy leg at the end. So when you see all of this long Luffy leg has absolutely no red candle in the middle. No red candle on its middle. So what do you do when a Luffy leg has no red candle? You look left, at the left of the Luffy leg, the top of the V, the highest resistance there, you draw a line like this, and you say that this will be the first place where, like the minimum first place, nobody can argue with it. The minimum first place where the market will fall down. So you will be drawing like this, or that's 4 hours. So let me place 4 hour origin, 4 hour reversal. Minimum. Because there is no red candle in the middle. There is no red candle for the price to stop itself and continue to the upside. So the next stop will be when you reach the first one. Okay, now you start looking at how the candles, how the Ishimoku in H4 is behaving itself. For example, you see that we have a TK cross that is aiming to the downside now. So now you know that you have the bottom of the left leg. The bottom of the left leg is now the second place that you are aiming. If we break it to the downside, it is already, what did I tell you? Is a deep correction, right? Or a complete reversal of the market. In this case, it was a reversal of the market because this one created a new trend. You see what I mean? You see what I mean? And we knew that it was a reversal. If you go, for example, on daily, the daily were doing his own correction like this. The daily were doing his own correction. So that's why on 4 hour it was a clear reversal, right? The daily we were doing his own correction. So that's a little bit how you know till where the candle would arrive minimum on the number one. So let us take another example just right here. Look at this Luffy leg. Look at this Luffy leg, right? There is no green candle during this down movement. But if you look at the left side of the Luffy, you will see this green candle body. This is the first place during this was a new trend, like KSB were forming in 4 hour. This was a new trend. So since you know that we are in an empty space on 4 hour and the market must go to the upside, till where the market can go, you just look at this green candle, this body of this green candle. This is the first place till where the market can go. And then you just aim like this. You get the point. Okay. Let us look at this example. Let us look at this example. We have something. We have something like this. This is the Luffy leg. This whole place is the Luffy leg, right? So because it is the Luffy leg, at this level we have the VRS. This one is the first point, right? This one is the first point where the market can stop. There is no red candle here, so this one is the first point. The second point will be the bottom of this Luffy leg. It's like checkpoint. It's like when you go, if the Luffy leg is like this, and you look at if there is red candle in the middle, like checkpoint for car driving. When you have a car and then you drive in a road that you travel, there are police station at the middle, right? During the road, during the travel, during the path of your of of your travel on the road to check if you have the identity card, to stop you a little bit. Is the same way that the Luffy leg walk. The Luffy leg walk the same way like that. That's why you can check it and see where the price can stop a little bit, and then predict that the correction will reach minimum. It means that you know the minimum amount of money that you can make by just doing this. You know the minimum amount of money that you can make. That's what I literally call genius of fractal geometry. Geometric or genius or geometric alpha. Genius. Okay, let us look at this Luffy leg. Look at this long Luffy leg. You see, during this long Luffy leg, even though I consider a little bit this, we have this red candle. and you have the bottom of the Luffy leg. You have this red candle. Minimum, the candle went down till the first this red candle. Secondly, the candle came and break below the part of the leg here, the bottom of the leg here. But this one was a deep correction and not a reversal of the market. This one was a deep correction and not the reversal of the market. The deep correction and not the reversal of the market. You see, the deep correction came on daily Kijun before keep going to the upside. This is correction. And not the reversal of the market on 4 hour. So okay. So now um let's go on Bitcoin. Let's go on Bitcoin. On the Bitcoin. Bitcoin. Okay, let's take this. Let's take this Luffy leg. Let's take this Luffy leg. The market were going down, creating lower lows, and then created the last Luffy leg here. And created the last Luffy leg here. Um, so the first, when you look at this, the first place where the market can stop because there is no green candle here, it is at this VRS. This VRS, right? This is the first place where the market stop itself. The next place will be the top of the Luffy leg here. And that's what happened. So when you have this and then you predict you predict your minimum movement. Your minimum movement, you just do like this, aiming the top, this place. That's where you know that you can make money predictably. You can make money predictably. This one will be your origin, right? And then when you do the how will you know that the origin keep moving to the upside? The reversal can move to the upside till around here, to around the top of the Luffy leg. It is because when you see on H4 is creating higher highs figure, like the M are going higher and higher. That's how you know that you can have it, but with the price. But you need to understand that at this point we have a when you do the time frame skipping method, at this point we literally have an a big setup of weekly, an SSB setup of weekly. So the SSB setup has a lot of power to move the market to the upside. You remember about the vision of the length of a setup. That's why you know that the market is still going to the upside. Okay, so let's try to do another one. Let's do this one. Look at this left leg. This one. Look at this one. This whole left leg. This one. On this left leg, right? The first stop will be this green candle on the middle of the left leg. The body of this green candle is being touched. I mean the body. So you know predictably that when you take the reversal, you aim at least at this level. The second will be the top body of the left leg for the deep correction. That's what happened. That's what happened at this level. You get the point? Okay, let us do this example. Let us do this example, this one. The market were going to the upside like this, creating highs, creating new highs. Okay, so now what happened is that the market created many highs, broke this last one, and this one was the Luffy leg. Let us look at it a little bit closely, right? When you see this Luffy leg like this, the last leg that created the V breaker, you have the body of the candle at this level, and then you have the bottom of the market. This is the number two when the retracement will happen, the number one. The number one place where we will reach. So we are in 4 hours. So what happened is that we knew that this one was a reversal, right? And then it reversed till it broke the bottom of the left leg, creating a low below it. And then you see this one was a complete reversal to the downside. But you can actually go on and do the fractal, the fractal analysis with the daily. You know that the fractality, the market also has fractality with the Luffy leg. So you need to go on daily, and at that level, you will see. Okay, what did you see on daily? Let me explain to you. I'll do this example to explain to you the fractal. So we were at this level, on daily, right? On daily, we are at this candle. What do you realize? Do you realize on daily? We do the Luffy leg on daily now. On daily, what we realize is that the Luffy leg is this whole leg that has all of these green candles. And then on the left leg, we have this red candle body that we can draw the projection to the right to see where the market can come and stop if it reverses. But before that, when you look left at the left of the left leg, you have this VRS top, right? You realize that Tenkan on daily reached that VRS. It means that I exactly at this reach, this candle should not keep going to the upside. We need to expect the reversal from now. And minimum number one, the market will reverse till this, until up to this VRS, because you have a Tenkan hit VRS here. So what you need to do is that you need to do your prediction on daily by placing the minimum reversal will reach the number one place of the Luffy leg that we mark. The second one will be this red candle here. right? And the third one will be the bottom of the Luffy leg, just at the bottom here. So you see that on daily, you already know what will happen. Places where you will go and see the the till the ending point of the reversal of the market. Let me try to draw it with a little bit of more clear. This number two, this number three, a clearer, with clearer lines. Okay, this number one, this number two, and then when you go on daily, how do you know that the number two of the when you go on 4 hour, how do you know that the number two, the number one of the daily, the number one of the daily during the reversal will be reached? Look at 4 hour. Look at the right side of this vertical line. At the right side of this vertical line, you see the 4 hour candle dropping down. But what do you see when we reach the number one at this level? The number one point. You see that 4 hour has what? Snakes TK. TK are snake inclining snakes TK, right? So it shows you that we will break this market at this level. No doubt about it. Secondly, when we reach the number two at this level, we are still in snake. We have not no intention of pulling back to the upside. Okay, so you leave the trade go till the number three and hit you. So that's how you trade the Luffy leg, and that's how you can literally do this on 4 hour. You can do this on 4 hour. You can do this. You place here the origin. Let me draw it like this on 4 hour. You can actually say on 4 hour that this is the origin. This will be the reversal, and this will be a non-existing transition. This is now the beginning of the new trend. You get what I mean? That's how now you draw the Vegeta Ishimoku cycle using the Luffy leg in the fractal by looking at the daily to best to draw the Vegeta Ishimoku cycle very well. You can use the Luffy leg this way. You can use the Luffy leg this way. It is another element that helps you to a little bit see till where the market can go. So I'm thinking, let me think a little bit. So let us do the weekly. Let us try to do the weekly. No, not like let us try to do. Let us do the weekly. The weekly, you see, for the weekly, right? We have this sort of Luffy leg like this, right? This Luffy leg is this one. I will take till this one because this one was not that much. Anyway, I can even take just like this. No problem. So during this Luffy leg, right? You have the bottom of the Luffy leg at this level, but you have no red candle on the middle here. So when you look left, you see that the highest resistance point, it is this one. right? The VRS, it is at this level. So when the market drop down, it drop down around here. That's when that's how you expect the correction to be, because this one was a correction. You see that it is a weekly correction. Am I do you see? Do you see TK correcting itself? But by just looking at this long Luffy leg, you can know till where the correction can reach. Now I will emphasize on one thing. Let us take another Luffy leg. Let us take this leg about the Luffy leg. Right. Now you will realize that this Luffy leg has no red candle in the middle. There's no red candle, right? And then the highest resistance is closer to the top of the Luffy leg. So it's not logical to say that the market will stop there and move to the upside. So what you need to understand is that one thing I didn't yet tell you that I'm telling you now is that if there is no red candle in the middle where we can stop, and then the market goes down and touch an Ishimoku line, then the movement, the down movement is finished. Start thinking in your head that this will be the last down movement, and then the market will keep going up to the upside. So if the when the candle touch Tenkan, it is the end of the correction. It is the end of this down movement. So if you were on daily, for example, and you were drawing your what your correction cycle, just aim the Ishimoku, the Tenkan, the weekly Tenkan, just at that level. Just aim the weekly Tenkan. Okay. So that's one thing that I had to emphasize. So the first point is also Tenkan. So it could have reached Tenkan first, then come back again till around this point, right? On the second point, without creating any V breaker, like hitting here and doing something like this. So the first one will be the Tenkan. That's what happened on this Luffy leg again. When you see this Luffy leg, for example, this whole Luffy leg, you had this red candle where the price should have stopped, but you have Tenkan weekly here first. The Tenkan weekly was the first point where you stopped, then creating new candle, new wicks, but none of this wick broke this VRS, and then the price moved down again till the body of the second point, the second stopping point on the left leg, right? So you can have also, when you look at this left leg too, this whole left leg, the first point of stop will be this green candle. The second point of stops will be this V, right? And then the third point of stop will be this one, the third one, the second one, the first one. The candle respected that. But when we broke the third one, that is when we broke the third one to the upside, that's when you break the Luffy leg top and you are going to a buy, it means that the market is fucking bullish now. That's when everybody knew that Bitcoin is going to the moon by looking at the Luffy leg like this way. See, for example, on the past, look at this on the past. On the past, when we made this correction down here, we had the Luffy leg right there, right? So if the market has to continue, the Bitcoin has to rise again. minimum it will arrive at the body of this V at the left of the left leg. Minimum you will arrive, you will move to the upside. Minimum you will arrive at this level. So that's what happened. And now, when it arrive here and then break the top of the, and then breaks the top of the leg, creating new highs, it means that Bitcoin has potential for moving to upside. So let us look at, so that is what I'm explaining to you about Luffy leg just right here. I'll just translate it in English. All of this explanation of this and this place on this correction, I explained to you it just at this level. So now let us look at one thing that is super mega giant important. This one, canceling the push trend. There's one thing, push trend cancellation. Let us talk about the push trend the push trend cancellation. Let us talk about the push trend. There is one thing, that's one thing that is fucking important, like crazy important. So the push trend cancellation, I call it I'm talking now about the push trend cancellation. So you know that when you have Ishimoku like going up and then going down, and then when it goes up again, it is the push trend, right? So if you had Tenkan moving up like this, then going down, and then Tenkan going above, yeah, like this. Okay, this one will be the new trend, right? Now this part will be the correction, and then this part will be the push trend. So if this happen, if the push trend happen, but they can bend down to the downside like this, start paying attention that this push trend will not work. It will not go further to the upside. That's one scenario. Just bending down. Start paying attention. Break even. If you bought from here, break even or get out of the trade. Secondly, if it creates a ticket cross to the downside, like completely reversing like this, the push trend didn't work, so completely exit your trade. So let us look at it. Yeah. For example, look at this movement. We had here the origin, right? We had here the origin, we had here the reversal, we had here the new trend, we had a almost non-existent or a short transition. And then you have the correction that ended up here. And then we have now the push trend. Look at this push trend. Let us talk about this push trend. The push trend is the one that take my attention. When you see that the push trend has started and then you are here, you enter a sell, you sell, right? You sell this movement. The candle are here, you are happy, and then your entry was around here, and you are hoping that the market keep falling down with your capital, multiplying it. But you realize that they can't start bending to the upside at this candle, to the upside like this, start breaking even. Brother, break even. Break even because it's one of the signs that the push trend will not go. The extra movement of the trend will not go. And then now when you see a complete Tenkan correction like this, Tenkan recross, Itike cross, creating a new correction, completely exit your trade and start buying this. So we can have it. We also have this on. Let me show you an example that is happening now on USDTPY on the daily of this push trend cancellation. Look at this. You have I will not draw. I will not draw in this stage. We had that here, the new trend at this level, then correction. Then this one was the push trend. You see that the push trend, this push trend created a little bit a Tenkan bending to the downside here. But that bending did not completely cancel the movement of the push trend. Then Tenkan kept moving to the upside. No problem about it. But look at this older push trend. We had here a correction, right? When you see very well, we had here a correction, right? A correction. Now, after that, what do we have? A push trend. Look at this push trend, how this push trend, what happened at this push trend. If during this push trend, right, your entry was here, you entered there, you place your stop loss somewhere here on 15 minutes, and then the candle were already above at this level, on top at this level, and then you see Tenkan going below Kijun for doing a correction, brother. Take all your profit. Take all your profit. Take all your profit at this level. Take all your profit because it's a reversal factor. The push number two is not forced to be applied because you see on weekly we are on the resistance on the Tenkan hit VRS. So you need to pay attention. Don't be too hopeful. What I'm explaining on this document here is that don't be too hopeful about the push trend. Look at the push trend with cold eyes, cold eyes, cold-blooded. Don't be too hopeful. The push trend on the Vijay-Shimoku cycle is one of the extra movement. To do the extra movement, the price need to be bullish, to have a lot of volume, and it doesn't always apply that way. So that's what cancel the push trend. So let us try to look at push trend cancellation, the cancel push trend here. If I can have some cancel push trend, I will be happy to show you it. Exactly. Let us look at this cancel push trend on the gold. See, for example, you have a correction happening just around at this level, and then you have this small push trend, see, and then you have a correction, and then you have another push trend. You see, when the push trend happen, normally when the push trend happen, Tenkan must stay bending to the upside. But if it start bending to the downside like this, it means that there is a correction, and you will need to break even your trade, because you see that when the candle start going down, it went down closer to this level, right? So push trend cancellation exists a lot. This whole part had a lot of push trend cancellation. Why do we have a lot of push trend cancellation? It is because on daily, you can actually predict even the push trend cancellation, because on daily, when you see on daily, we were on the empty space. We just made a new push trend on daily, and we had this TK course. And since we are inside the empty space, the candle must first of all fall down and touch the daily Tenkan before moving to the upside. It's only when the daily Tenkan will be touched that we can go up to the sky, to the moon. Okay. Let's talk about the let's talk about the let's talk about one principle that I call Tenkani variance on weekly. Let's talk about this principle. Mm, look at gold. Let us analyze gold. On daily, on weekly, we have Tenkan at this level, right? Now. But this Tenkan, having Tenkan at this level uh, shows that we don't have any intention to create a reversal because the reversal place on daily, the market is not yet ready to reverse. That's what I'm trying to tell you. On daily, the market is not yet ready to reverse because the resistance, Tenkan did not yet enter on the resistance here. Tenkan is not yet inside the resistance of this candle, like between the boji and the top wick, between the top boji and the top wick. Tenkan is not yet here on daily, on weekly. So the market is not yet ready to reverse on weekly, on the weekly time frame on gold. So let's look at the daily. The daily, what do we see? Tenkan daily, right, got inside his resistance. So that's why you see this red candle. The reversal is, a short reversal is on Tenkan daily origin. But now we have a Luffy leg like this. On this Luffy leg, the maximum point that, because there is no red candle in between, the maximum point where the market can reach it is, if it reverses on daily, it is at this level, level 1 on this VRS. So now let us fall down on 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 the H4. What we see on H4 is that we have this whole leg, H4, right? Whole Luffy leg. What do we see is that we have this first red candle where the market can reach. But before that, Ishimoku has been touched already. So this one was the first, and the red candle will be the second. But what happened in that is interesting is that we will not reach this red candle because we will not reach this red candle of the Luffy leg because we have been creating a new high above this leg, right? So there is few chances that the market reach to this level, to this red candle. So even if the market fall down like this one would be the maximum stop loss for the gold now. But because we created this upward movement, we the maximum stop loss logically is this stop loss, yeah, on weekly. So how to enter? On 15 minutes, anything can bending to the upside like this will be an inverted Tenkan entry of 15 minutes and 5 minutes. Just before the maximum stop loss there. For example, what you see here, this one is an entry to the buy, for a buy on 15 minutes when we fall down. It's an entry for a buy like this, and you aim the top high side. So you can actually even look at 1 hour. Look what her 1 hour is telling you. 1 hour cloud is bending to the upside, an inclined snake, right? Inclined snake on 1 hour. You see inclined snake on 1 hour now. Inclined snake on 1 hour now. Showing what? The intention of the market to go to keep moving to the upside, and proving that this one is the maximum stop loss. And this CK is just a TK correction that is about to be bending up to the upside. So you can actually even go on 5 minutes and enter as soon as the Tenkan bend to the upside like this. You get my point. That's exactly it. That's exactly it. That's my point. So that's how you do a quick, complete analysis with the Luffy leg. That's what I wanted to show you for this on this video. Yeah, that's what I wanted to show you on this video completely. Yeah, let's just come back on. Yeah, that's what I wanted to show. So let's now look at the next, the last phase will be the power of Vegeta Shimoku. The power of Vegeta, something like that. The powers of Vegeta. I will translate it. So choose.